John Kelly will be leaving at the end of the year. We'll be announcing who will be taking John's place. It might be on an interim basis. I'll be announcing that over the next day or two. But John will be leaving at the end of the year.
That's President Trump announcing his chief of staff, John Kelly's imminent departure, bringing an end to his 17-month-long tenure in the Trump administration. Let's bring in Peter Navarro. He is the White House National Trade Council Director. And, Peter, it's good to see you this morning. Thanks so much for being here.
Good morning, Maria.
I want to talk a lot about trade and tariffs and certainly the situation with China. But first, let me ask you about John Kelly. How does that change your agenda or change how you are dealing with the president now that he is looking for a new chief of staff?
Let me say I had the privilege of going to the staff dinner with the First Lady and the President on Friday night. The President had nothing but warm words to say to John Kelly. He served with honor and dignity while he's been at the White House, and before that when he was in uniform. We wish him well. The tradition of the Trump administration over the 2 years I've been there is that people come and go. Every time we get a change, the change is good. It doesn't mean it's for the better. And I wish the chief well, and we're going to just move forward the way we've been moving forward. You have to remember it's the president who's the leader and the chief here.
Right. And we'll be watching to see who he names next as his chief of staff. In the meantime, Peter, look at these markets. We had another wild week for the stock market, down 600 points one day, down 500 the next day. Now we are looking at a decline year to date with the Dow down in negative territory, S&P down in negative territory for 2018 on worries over trade, tariffs, higher interest rates. We all know that tariffs were your idea. People are worried that these higher tariffs are cutting into companies' ability to grow because input costs are going higher. That's crushing profit margins and hurting the stock market. So what are you going to do about it?
So, first of all, I think that's a false narrative in terms of the impact of the tariffs on the stock market. My view is that this is strictly an interest rate effect. I think the Fed went too far, too fast, and what we saw basically was a little asset reallocation from the stock to the bond market. We've had some impact on the housing market. In terms of the dollar, it's too strong now, and that's exacerbated our trade deficit. But this is a normal adjustment. To me, it's not even a correction. You have to remember where we started from back on Election Day. We've come thousands and thousands and thousands of points forward. And on the day after election, Maria, I predicted that we would go to 25,000 on the Dow. A lot of people laughed at me at the time. We got there.
I predicted it as well, Peter. I mean, I know that the president's business-friendly policies have been great for the market and the economy, by the way. We saw 4.2% economic growth in the second quarter. But now we're dealing with some big issues. China, for example. How does the arrest of the CFO of Huawei implicate or change this truce in terms of talks between the U.S. and China?
On the outside, it looks like a complication, but these two events are independent. The Justice Department is moving forward on that. We'll see how that goes. I think the most important thing is at the dinner we had in Argentina, the president of our great nation and the president of China have very good chemistry together. The president of China spent 45 minutes providing a detailed plan to address the various structural issues facing our two nations. And you know what they are, Maria. It's the forced technology transfer. It's the intellectual property theft. It's the currency manipulation. It's the state-owned enterprises that basically run around the world with massive subsidies. These have to be addressed. And so I'm confident that with Bob Lighthizer in the lead and a good team behind him, that by March 1st, the Chinese will deliver on their promise to have concrete, verifiable actions with concrete, verifiable results. And we should be optimistic. But the markets shouldn't pin their hopes on that, because that's not what this is all about. We have a tremendously strong economy. Every indicator is pointing up. We're bullish. The China trade is a small part of our overall economic growth and world trade. And I think what we need to do is focus on the structural adjustments that are occurring here in this economy under the leadership of the best presidents we've had in modern history.
Yeah, but everyone's worried about growth because of these tariffs. Is there any reason to believe the tariffs on steel and aluminum go away over the near term?
So, Maria, look, there's a lot of false narratives out there where they're trying to beat back the tariffs, but the tariffs have been growth-inducing and investment-inducing, productivity-inducing, and steel and aluminum is the poster child. Hang on.
Stay with us. We're going to take a short break and come back to this. Stay with us. Welcome back. I'm back with Peter Navarro right now. And Peter, you were in the middle of a thought in terms of what the impact of this market is. I mean, could this be a cycle where it's just negative, where the market drops and that impacts and cuts into economic growth, all of the things that you're talking about that were so great about this economy?
Certainly not, Maria. You know that the market is simply a leading indicator of the economy, and the economy is just rock solid. Business optimism, consumer confidence, ISM manufacturing index, productivity up, wages up, unemployment at record lows. And the best part of the Trump economy is that the people at the lower end of the income stream, the Trump voters who work with their hands, they're the ones who are benefiting the most from the falling unemployment and the rising wages. So this is look, this is an adjustment. It's not even a correction. The economy's rock solid. We're moving forward. Importantly, the Federal Reserve has announced that it's no longer going to be announcing interest rates far in advance. It's going to look at the data instead and make reasoned choices. And the beauty of the Trump economy, Maria, is that all of the structural changes that the president is putting in, from corporate tax cuts to deregulation, that allows growth-inducing deflationary growth, stimulates investment, productivity, and wages. That can go on for a long time, and it will go on for a long time, and the markets are going to reflect that. So you know how Wall Street loves to wring their hands and gets all upset, and the program traders love it.
Peter,
strong economy, strong stock market.
Do you really think that the Chinese are going to admit that they've been stealing and they're going to stop it in the next 90 days? Real quick.
At the dinner in Argentina, there was an acknowledgement of the practices that they engage in, and they said they would stop doing it.
So they acknowledged
it. I mean, look, yes, and you and I mean, look, we've looked at this for years. We know that China has unfortunately never honored a single major commitment it's made going back to the World Trade Organization entry, and in 2015 promising to stop the cyber intrusions into our businesses. They just keep doing that stuff. But this is different. This president, Donald J. Trump, they respect him, they fear him, and if anybody can get a deal, it's going to be President Donald J. Trump with Ambassador Robert Lighthizer.
All right, we will leave it there. Peter, it's great to see you. Thanks so much.
Take care, Maria.
Peter Navarro at the White House.